Hi, it's Wednesday, November the 10th, and this is your Mortgage Rate Watch, brought to you by mortgagereal.com. So what's really happening with rates? If you're paying attention to rates, if you're currently in the process of refinancing, or you're in the process of purchasing, you've noticed that the interest rates have slidden off or moved upwards, we're going to say almost significantly. And it's been a total of 5 business days where we've had this downward pattern. Now again, keep in mind that since the QE2 release and the overall announcements of it, it spurred the fears instead of deflation going into inflation. And inflation is unfortunately the arch enemy of mortgage rates and bonds itself. Now, many people are thinking, and what you hear out there is many speculate that, hey, the 10-year bond, look at how well it's doing. The 10-year bond has absolutely nothing to do with the mortgage market, and in fact, it has nothing to do with the mortgage-backed securities. That's what's tied to your home loans as homeowners out there. So there is a very, very clear distinction on people that you're working with. If they happen to drop the information and say, look at the 10-year bonds and look at how well they're doing. Well, if they have been telling you that, you could tell today that they've been proven absolutely wrong, because it has no correlation. If that were the fact, interest rates would be much lower at this point, not higher. Now, the biggest thing that we're going into is since the Federal Reserve announced this whole quantitative easing, and for homeowners, we still haven't been able to digest on how that's really going to be impacted on our side looking at mortgage rates. The interesting thing this morning is it's called the Permanent Open Market Operations, or now another acronym, POMO. And what that's going to really say is how the Federal Reserve is going to use the funds that they're putting out there, what they're going to buy, and what frequency, and really how much. They already said it's going to be about $75 billion, but they really didn't break down of what was going to be purchased yet. We know it's going to be some form of treasury, some form of bonds, but it still really hasn't impacted the mortgage market. So the biggest thing right now is the more you hear inflation, unfortunately that's going to play against us in the mortgage world, and for homeowners, that could potentially mean higher interest rates. Now, how high? Well, just to go to think about the national averages, here we were at 4.2, heading down to the 4% national average almost. In Washington State, depending on where you're at, here's a range, 3.875 to 4.125%. And now today we're probably pushing higher between 4.4% and 4.25%. So, again, this all depends on the structure of your loan. We don't want to get into the exact details. But again, the biggest thing is right now the word of inflation is really going to spur mortgage rates. And the more concerns of inflation that come out into the media, that go on to Wall Street, and the more Wall Street develops a sentiment that inflation is returning, unfortunately it's going to hurt rates. Now, this is the biggest thing. Ben Bernanke, many economists say that inflation is still 3 to 5 years out. And right now, that's a pretty good hedge that what we've been able to understand and decipher on our own. This is all speculation. It can all change at the moment's notice, it seems, these days, because of just human nature and having market volatility. But that's what overall they're saying. So, in closing, make sure to keep an eye out. If you do hear it when you happen to turn on local media and they do say anything about inflation, and they talk about gas prices moving up, and that's a sign of inflation. Well, not to say that gas is tied to mortgage rates, but that's not a good sign if you're hearing those words in the media. If you start hearing deflation, that's actually in the favor. But at this point, it seems like deflation has been taken off of the tables, at least for the time being. Make sure to follow us on our Twitter page, and upcoming soon will be our Facebook page. And we're going to release the title that's going to be How to Beat the Banks on Your Home Loan. So make sure to check in on that. We'll have it on our homepage as a big banner, and you can share that and like us. And then we're also going to do a lot of webinars and homeowner education classes there, just to get people more and more familiar with what the options are, so that we take this negative sentiment of just walking away from home ownership. It just seems like media has done a horrible job at really what home ownership means and what it always has meant, to have pride in home ownership instead of just walking away. You wouldn't walk away from an investment if you put $1,000 into something and they said in 2 years it's going to come back and double. Well, you wouldn't walk away and just sell off those investments. Unfortunately, that's almost the prognosis that media has created right now for home ownership. Many are just walking away because they believe they're too far underwater. And in some cases, unfortunately, that could be the case, but there's just becoming way too many cases of people just not having pride in home ownership, and we have to correct that here in our country if we definitely want to have a strong economic return. So make sure to check in soon, and we'll be back tomorrow.